What's going on, guys? Welcome back to the channel. Today I have a special one for you. Started a new format that's gaining a lot of popularity. People like it, where we go into detail on a specific city, area, state, where I unravel the details of the city, statistics, the pros and cons of the city, and then also we're going to go into detail and I'm going to show you how the numbers work, how you could finance a house in this city. Today we're going to cover a city that's near Sacramento. It's called Antelope. For basis, Antelope is 15 miles or 20 minutes away from downtown San Francisco. Nearby cities, Rockland, Carmichael, Folsom, El Dorado Hills. Now, you might have heard those cities before. Those are very popular cities for families, for good schools, and then this city is really close to it. So median prices in this city, it's $508,000, which is 1% higher than the same period last year. In the United States, the average house is $421,000, which is up almost 3% from the same period last year. Now, some statistics that we pulled from Redfin. By the way, Redfin is one of my favorite apps to use for real estate. You not only can find like prices, rent, house, but you could also get a lot of cool statistics about a particular city. And today we're gonna go over a couple things. Let's start off with just statistics of the market. So homes are selling for 1% higher in Antelope and 10 days after being on the market. 47% of active homes have a price drop. Now, this doesn't mean that the whole area is, declining and, you can make like really low offers and get them accepted. No, this just means that about half of the sellers that might still be living in the past, that set their prices a little bit too high, and now they're doing price reductions to come back to market. Now, Redfin gives us a really cool rating that gives us like the hotness of each market. So this market has an 89 out of 100 rating. Homes are selling in the first 10 days and are going for 1% higher. Nearby cities like Roseville have a rating of 77. They're selling 16 days on the market. And Citrus Heights, which is also nearby, has the same rating of 89 and it's selling for 10 days on the market. Now, this is a really cool statistic that I like. It's showing online searches, where people are searching from, how often. So 29% of online searches about Antelope are coming from people that want to move out or they're searching for other places to leave the city, while 71% of people are searching how to move into the city. Now, out of those 71%, the top 3 cities are San Francisco, LA, Chicago. Now, these are very big cities in the United States with a good economy. Cost of living is very high, so it makes sense why people from those big cities that may have good jobs are trying to move their family into smaller cities like this that are still affordable. Schools is very important. So in Antelope, elementary schools have a rating of 7 and 8s. Middle and high school have 6 and 7s. Now, it's not the greatest rating. However, it's not the worst either. It's above average. So at this price category, this is considered very good for a starter home or for somebody that wants to move into a place where cost of living is much lower. Natural hazard risks, so there's 4 that we go over. So flood, in this case, is very low chance. Fire, it's also low chance. I know California has high fire zones, but in this case, you're kind of far from the mountains, so it's not as bad. Wind, also California, it's very low rating. Now, the only one that has a high rating in this city is heat. Now, I think overall California has this rating pretty much medium to high, like no matter where you look. But in this city's particular, 16 days out of the year, you could experience a temperature of 102 Fahrenheit or higher. Now, let's take a look. I'm gonna share my screen and I'm gonna show you guys what my client purchased. Okay, so here's the house that we bought. This was August 11th, 2023. A little bit different interest rate market, but nevertheless, this is not that far away. So they bought this for $491,000. Unfortunately, Redfin doesn't allow me to show pictures of inside. After the property is sold, those get removed, and the only thing left is the exterior photo. But you can see it's a nice looking house, good curb appeal, single level, high ceilings, 3-bedroom, 2-bath, almost 1,400 square feet, located in Antelope, and we bought it for under $500,000. Now, numbers. My client that bought this is an investor. This is the 4th property that he's bought with me. He has a single family that he owns in the Bay Area, and then he's diversified and went to Sacramento, Davis, and then this one is in Antelope. Now, he put a bigger down payment because he had the money, plus he's going to be renting it out, so he needed it to cash flow. Now, $491,000, 25% down payment, which is $122,750. His mortgage is $368,250. His monthly payment is $2,327, $154 for fire insurance, and $416 for property taxes. All in all, excluding utilities, his monthly payment is $2,898 per month. Now, I just did a quick search. You guys could do the same, but you could see the rents in the area for similar size are going for $2,600 to $3,000 per month. Now, his payment is almost $2,900, and I could assure you that this property, just because of the floor plan, just because of the size, the nice long backyard, this one is going to rent closer to that $3,000 mark. So he's going to be breaking even or making a small profit on this. However, since we all know the rents go up, so this is fixed in for him. So maybe in 2-3 years, that number is going to be much higher. Plus, he's got a big chance to refinance. Because I for sure, all of my clients, every 6 months we do analysis. But for someone like this, you will get a chance to refinance in the future. Plus, rents go up, so that cash flow is going to go up significantly. Not to even count the equity appreciation, because when rates go down, prices go up. This is just how the system works. Now, I wanted to take it one step further, because not everyone on my channel, not everyone in my client base are investors. I do have a lot of repeat clients. However, my niche and my specialty is people that are buying their first home. Now, how would this look if you're buying your first home using 5% down payment? Now, this $491,000 purchase with 5% down, it's $24,500 down payment. In this case, since you're borrowing more, you have PMI, your monthly payment is going to be $3,860. Now, in the United States, the IRS allows us to do something really cool. It's called a tax deduction for people that occupy their own home, and they allow you to write off your mortgage interest and property taxes against your yearly income. So I've already done the math roughly, because I do this with so many of my clients, and I've been doing this for 9 years already. So I know that this $3,860 payment, after all said and done, you take your deductions, you submit all your forms that the mortgage lender sends you, you're gonna end up being in that $3,000 per month mark. And then the question is, wow, so if the rent for a similar place is almost $3,000, and after my tax benefits I'm also almost at $3,000, why don't I just buy this? So what does it take, Steve? So $95,000 income per year allows you to qualify for this exact option using $24,500 down payment. Now, of course, if you have more down payment, then your income could be a little bit lower. However, if you have the down payment and you're a little bit tight of income, maybe we could add a co-borrower, or maybe we could buy down the interest rate. There's a lot of creative options to do it. But in this scenario, with 5% down payment, it's gonna take $95,000 per year. Guys, I really enjoyed shooting this video for you. If you enjoyed it as well, please leave a comment below. Tell me what you liked, tell me what you didn't like. If you have any insight into the city that we didn't cover, or if you have another city that you want me to cover in like future videos, please do share as well. Thank you guys so much, and I look forward to seeing you on the next video.